Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some higher price levels today. We did see 10-year note futures lower for 7 consecutive closes. Until today, we're seeing a bit of a reversal here in today's price action, putting the futures market back in the middle of the 120 handle. 120.15 is where the futures market's currently trading. We did see an intraday high of 120.25, so we're off the intraday highs, but nonetheless still up on the session. And I think when you look at some of the driving factors today, a lot has to do with inflation data that was released this morning, U.S. CPI data. Core came in below expectations, headline number in line with expectations, but going into this number, there's a lot of market observers that felt that even the numbers that were anticipated or forecasted were too low. So the fact that we just met those numbers or came in below really did impact the interest rate market today and the treasury markets, as we saw some adjustments now as potential, I suppose, that at least short-term inflation may be peaking or at least coming in below expectations, and therefore a shifting of the pricing action within the treasury markets and some strength today. And a couple of that with, we did have an auction today for 10-year note as well. The 10-year note auction went off. Now, we did see lower demand than what had previously been represented in the March auction. So I guess a little bit less demand than the previous auction. We did see a reaction, slight reaction, where we did experience a little bit of selling pressure after the release of that auction result. But nonetheless, nothing too significant, and still looking at the 10-year note futures holding here in the middle of the 120 handle. Now, looking at the yields, we're looking at yields coming off today after reaching over 180 basis points in the last 24 hours. We're looking at the 10-year yield, 172 basis points, so that's down 6 basis points, I should say, from yesterday. And when you look at the yield curve today, again, shifting higher, steepening, I should say, as the front end is rallying quite a bit today, pushing those yields lower. And the back end is holding pretty steady, particularly when you look at the 20s and 30s, where they're basically unchanged on the day. It's really in the front middle of the curve where we're seeing price action shifting quite dramatically, and certainly seeing yields coming down when you look at the 2-year through the 7 years as where you're seeing this significant adjusting in the yield curve with those treasuries rallying today more so than the back end of the curve.